Hello, family. Hopefully, you are doing well, guys. It's my prayer that you are well and fine. So, today, I want us to study something here which is very interesting. There is a way that we can trade Friday, and by doing so, I mean that ICT gave us something that was literally free called TGIF. Thank God it is Friday. So, after my study of that concept, I want to give you two conditions that must be there for price to trade back into the range on a Friday. Now, number one, this is Monday, Tuesday, Wednesday, Thursday, and Friday. I don't want to go back to the previous week's outlook. You remember we were very bullish. This sell-side liquidity is the weekly fair value gap premium. Now, Tuesday has formed the high of the week. For my TGIF to play out in a number of times, not every single week, from my studies, is that on Monday, Tuesday, if Monday or Tuesday forms the high of the week, in short, if Monday or Tuesday is the smart money reversal, then there is higher probability that on a Friday, price is going to trade into the range. What I mean is that if Tuesday forms the high or Monday forms the high of the week, on Thursday should clear or complete the range of that week. Therefore, then we can have Friday trading back into the range. Do you get that? How does happen, or how we can confirm that, or how does that happen, is what I want to share to you today. So, Tuesday has confirmed the high of the week by, or how? By closing below that. That is a change in state of delivery. What else? Fair value gap there. And then from there, patience without fear of this retracement all the way to a target profit. Sunday highlighted much of the details that you can learn from that outlook. Now today, my work is down here. This is Thursday's price action. I said this sell-side liquidity is the weekly fair value gap premium zone. Okay? Now, how do we confirm that now we want to trade into this range now? Look closer here. Whatever we have here, this is what? An order block. You see these down close candles? That is also an order block. But what you've realized, what works for me, is the last up close or down close candle that takes out an old high or an old low. Rewind there and listen again. Now, when price closes above there, then we can now go to a 5-minute chart so that I can pinpoint things that you need to look into. Now, remember, I'm only interested to go what? To go higher. This is what? That daily order block. Let's mark this one, daily OB, so that we don't lose it. Now, if I want to go high, I want to see price open lower from what? The New York midnight. Let's fade this one here. New York midnight is here. That's this line here. I don't want to draw across our horizontal line here to confuse with this one. So this vertical line is delineating the New York midnight open. So if I want to go high, I want to see price open low below the New York midnight open, then go high. But when it is opening low, I want you to see something here again. You see this high here? When I do these things, you also go to your charts and do them. You see that high and this low here? Sorry. This high and this low, that is the Asian range high and low. Asian range low. This is the Asian range high. Asian range high. Always, if you don't miss something, you go and rewind the video and study it again. Now, why am I drawing this range high and low? Take your gun box and draw this, measure that range. My concern is the 50% area of this range. Well, I know you are like, what the hell is this? Yep, you love this one. Look at that. No? You see that? Now, price is opening low below what? The New York Friday of midnight open, lower to what? 50% of the Asian range, high and low. And where are we here now? We are at the discount. I want to surprise you again. This might not look so clean. Let's go to 15 minutes. Work with me here. You're gonna love this one here. Sorry. Let's do this. All right, look at that. Look at that. So we have the Asian range high and low. Price, this is the midnight New York open there. Price comes down to what? Open your eyes here. What is this? Key level, 15 minutes, key level. All right. You see that? So this line here, red, is the 50% of this Asian range high and low. And below that, we have what? A key level. Now price is where? At the discount. We anticipate higher prices. Let's go back to 5 minutes. We will get back to that 15 minutes again. You see that? Isn't that amazing? Of course it is. Okay. Now, I want you to study this price now here. Remember we have said, now I want you to open your eyes to this price action here. Let me put it somewhere here where you can see it clearly. Right. So, price has opened here, riding higher, has dropped lower to our key level, below the 50% of the Asian range high and low. Okay. Now I want you to look closer here again. So I can remove this line here now because I don't want it. Now what do we have here? Somebody, what do you have that? Black is okay for me. Good. Then we can reduce this to 1. Yep. So what is this? Sell side, liquidity, middle center. Taken to what? A key level, 15 minutes, fair value gap. I don't know about you, but this thing is interesting. Now, low, high, lower, low. Remember we said we want to see price close above this order block before we do anything. Did it do that? Yes. How? Energetic. Did it cause market structure shift? Yes. Last up close candle here before this low was taken. What is that? Breaker block. Look at that. Okay. Let's make this one bold. What is that? A breaker block. All right. Now, when price closes above, what do we look for in this price reg here? Fair value gap. You see that? Yes. Low, high, lower, low, breaker, energetic move, causing market structure shift, breaker there, price coming back to what? Man. This one is goated. This model is goated. Like, there's nothing that is easy to trade like this model here. This is the goat. With horns. Very amazing, right? You see that? Yeah. So price does what? Does its thing. Breaks above there. Market structure shift. Breaker block. Order block. You see? Fair value gap. And then we start to do what? To go high. You see, the reason why I have not deleted this one is to confirm to you that we need to see price closing above this daily order block, 1 hour order block, not daily order block. Should check that. It was 1 HR order block. Yep. Yeah, it was 1 hour order block. We should have seen that earlier. You see this one? Yeah, it's 1 hour order block, not the daily. All right. So amazing. All right. So that is how you confirm that now price is likely to start trading into the range. We were bearish. Now we want, on Friday, we want to be bullish. That's what I mean, into the range. How to confirm this is, number one, you need a Monday or Tuesday to form the high or the low of the week. From there, then that is when we have a higher probability TGIF. And again, I say thanks to a big thank you to ICT for such an amazing concept. Turtle soup, inversion fair value gap, another entry. Breaker fair value gap, another entry. Then we are going higher. You see that? Now, I want to go 15 minutes. I explain something before I tell you how to use the FIP levels. Look at this one. So remember, all these are from the 5-minute chart. Now, this is what? 15 minutes fair value gap. What is this? All this down close candle is what? An order block. I told you the best way to trade order blocks, when they are respecting 50% or the upper quad, as you can see, the bodies do not go lower, but that is a good entry. But even a sweeter now entry is for me to wait. You see all this down close candle here? When price closes above, they become what? Hello. An order block. You see that? Now, when price is behaving from here, now you can see the energy moving higher. That is simply that is how I trade fair value gaps. I want to see price reject, close above the down close candles, and then go higher. Remember, in 5 minutes we had the breaker, fair value gap, we had the inversion and all those ones. But you see, in 15 minutes, it now becomes sweeter. You see how many factors are converging there? Of course, yes. Okay. Now, then how can I trade or project my target using the fib? Okay. Now, when I'm using the fib tool, look at that. If I want, for example, if this is range high and this is range low, I will use the week to week of the range high and low. The week of the high and the week of the low to measure the range. When I'm looking for targets, I want to use the body to body. Body to body. Okay? If you look closer here, we have a smaller breaker, and we also have a higher breaker using the Asian range high and low. Now, because I want to project this one, because my entries are here now, you saw that from the 5 minutes chart. Look at this one. I want you to work with me closely. This range high, the last down up close candle, let's remove this one here. So if I project from this body to this body here, you see that I can form a range here. When I'm forming this range here, I'm targeting key levels that coincide with the values. You do not get that. Key levels that coincide with the values. Let me remove the negative side here for now, because we are bullish like that. If you look on this side, what is this? This is 2.5 liquidity. This is 3 fair value gap. This is 3.5 fair value gap. You see that? Or you see this move here? Look at how quick you could have got your profit there. Okay. Now, I did not use that one because we had a bigger range here. So I used this one. Now, I want you to look at this one clearly. So from one body to body, and then body to body down there. So the body of this last up close candle before this low was taken. That range there. I want you to look closer here. I have some flu, man. It's been taken me long to disappear, but my voice is getting better. For someone who was saying I'm not loud enough, that is the reason. And you can see, you can hear it's not that good. Huh? But don't worry, we will finish this one. So look at, this is 3.5 level, and also this is 400 level. Okay, that this area here, that is where I take my major profits. What is inside here? Look at this one. What do we have here? A fair value gap. The low 3.5 we had an order block. Look at that. Boom. taken out. The high here for, we had what? Another block and a fair value gap. Look at that. Rejection. And after doing that, what did it do? I can't explain much than that. Look at, like, this is good. Huh? This is amazing. If you can know what you're doing and get such a kind of move, then you can appreciate yourself that you did well. You did well. So that is how I use my projection. If I'm measuring the range high and low, I use the wicks. If I'm looking for targets, I use body to body. That is what works for me. You can also go and try and see what works for you. This is not cast on the stone. Like, now I have to use it. How Lemayan does it? No. Okay. Now, if you could have taken this trade using the 15 minutes chart, after taking this short-term low to a key level, price closing above. Remember, this is that 5 minute fair value gap. Price closing above here, confirming an order block. Okay. What time is this? This is 2 a.m. London open. So if I take this trade here from this candle, somebody said I did not trade inside the kill zone. I laughed a lot. You just need to be careful before you complain. You go to the chart. You see that? And the price did what? Went all the way to my take profit. Isn't this something that can, spice your weekend and maybe, make you go to your charts and see things here? Then you can scale in. You see, there are so many areas you can scale in. But see, just objectively today was how to trade that TGIF model. So you can take advantage of Friday when you know what Monday and Tuesday did. Is it going to happen each and every single week so that you can make profits? No. But when it does, you see what is happening here. This is amazing. This is beautiful. An upward move all the way to my take profit. Guys, if you can be honest enough, this is good. This is super, super good. You might not be okay with this one, but I can tell you this is something that can help you navigate the markets on a Friday. Those concepts that I've just said, I am requesting that you go back and review. Go back and do what? Review your charts. Go back and watch again if there's a point you do not understand. And always be a student of the charts. Learn each and every single day. It never took me easy time to get to these levels. I see some people saying, oh, I got profitable after, learning in 2 days, 3 weeks. I can tell you that is a luck. You can be lucky once, twice, 3 days, but you cannot stay longer in this game. So don't be hyped. Don't be excited by somebody telling you, oh, you don't need, 6 months. You don't need a year. You don't need. This is something to conquer your emotions, to conquer your, your fears, to conquer a lot of things. It is not an event, an overnight event, but a process. If you submit to the rules, if you submit to the right content, it will take you now shorter time than someone who have zero idea that this YouTube channel exists. Somebody who has never heard of my name somewhere. Someone who has never heard of a mentor in disguise. Someone who is so much interested to offer something for free that is probably being sold for a lot of money. So if you are here long enough, I can tell you, you will shorten your learning curve. And you've seen it. We've called this price each day, each week. And it's not guesswork, but top-notch discipline, next level, skill mastery, without fear. We are executing, we are calling the market without fear of what the outcome of that trade is. So, and you've seen it. I don't see that now because this week's outlook did not print out, let me delete this video. No. We can get some right, we can get some wrong. But so far, we've been doing super, super well. And you can be my witnesses across the charts that whatever we are doing is something that has logic, not just pattern. We don't just follow pattern for pattern's sake. No, we need to have a pattern that aligns with logic, and then now logic meets time and price, and then now we triumph over this market like we know what we are doing. So I believe that you are going to take this as something to study. Go to your charts and find out when Monday or Tuesday forms the high low of the week, how does Friday trade or price print, and you realize that sometimes you might be moving entries on Monday, Tuesday, Wednesday, Thursday, but when on Friday you start Monday and Tuesday, you have a trade on Friday which can cover your losses, or a high probability trade on Friday if you never got a trade on in between the week. Guys, I'm really praying and hoping that you will find value, you will find your jade very soon if you only stick to the rules. My prayer is that continue showing up. It shall be well. Hopefully this was something worth your time, around your 20 minutes. And my only request is always press the subscription button, share the channel, comment, and tell your friends who probably are always also struggling to get this concept right. I am here, and I will be calling for the rest of this year. It is all about business with you for free, calling the markets, giving you my logic, and waiting for the week to print out and finding whether we were right or we were wrong, and refine and move on. That is the best bit of being here. So I believe it shall be well with you all. Until next time, be safe.